Dalal Street sees a sharp recovery in the last hour on expiry day. Nifty gains more than 140 points from the lows to stay above 25,900. Metal stocks led the uptick while IT drags.
Trading at MCX resumed after halting for more than 4 hours amidst a technical glitch. The delay occurred just a day after MCX launched options trading in the bullion index. This was the second halt in trading on the commodity exchange this year.
Kaynes Technology and Syrma SJ surge in trade after METI approves first batch of 7 projects with an investment worth 5,500 crore rupees. Kaynes tells CNBC-TV18 that they will meet the timeline set in electronic scheme, while Syrma says India will become a hub of competent manufacturing in coming years.
You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Hormuz Fatakia. With me is Sonal Bhutra. Sonal, hi. It was a proper topsy-turvy session, right? It was a proper expiry session as well for the bulls, for the bears. Everybody had an opportunity today.
Yeah, they did, and that was something which is always expected, right, in monthly expiry. So today, the Nifty, it did recover from the day's low. Look at that surge in the last hour of trade. In fact, last minute of trade, 30 points there in the Nifty, but we did recover around 130 points from the day's low. Nifty Metal Index did really well, so that was the one which was batting it for the bulls. But what didn't do so well, it was the IT space. A big weight on the index, and that is something which did not do so well, and that also saw some recovery. But yes, it was still one of the laggards in the session today. Bank Nifty ended in the green. We did have PSU Banking Index that supported that index, 1.2% higher on that one. And that spike, IT and banks, they led to that recovery that we saw on the Nifty from the lows of the day as well. But of course, we have got you covered for the next 20 minutes with all the big news and the key developments on Dalal Street, top corporate voices and events to track ahead as well. So let's kick off with the big movers that we saw in trade today. In fact, we do have a lineup of what we have in store for you today. We start with top movers and shakers of the day with Vivek. Oil companies were in focus today as Indian refiners cut Russian oil imports amid geopolitical tensions, while TTK Prestige and Quar Trade Tech zoomed in trade after reporting their earnings. Stay tuned as we'll tell you all the stocks that were buzzing in trade today. Last but not the least, we delve into the key market events to watch out for tomorrow's trading session.
And to our first segment of the day, Vivek is here to tell us exactly what was moving around in today's session, earnings and non-earnings alike. Vivek, over to you.
Well, that's right. Thank you so much for that. What a topsy-turvy session. Like you mentioned, quite a few stocks that made all of the moves. Look at Syrma, this particular name, company got the nod for electronic component manufacturing. That stock high by over 6% today. The entire metal pack, retained its strength throughout the trading session. Most of the stocks in the Nifty Metal Index did quite well. Names like Welspun, Tata Steel, JSPL, all of these stocks doing quite well. Car Trade Tech, results came during market hours. Very strong set of numbers, over 17% higher. Good volumes well. Newgen Software, this particular name after a while saw very strong up move today. This was post the result announcement Q2 over 11% higher for this name. And TTK Prestige, again, another strong results candidate. Cookware and appliances segment for this particular company did very well. Stock higher by over 8.5%. On the other hand, quite a few laggards as well. Towards the end of the trading session, TVS Motors came out with its results, a marginal with our estimates. Stock ended low by 2%. The exchange stocks, MCX of course dominated the news flow, but that particular stock and BSE, both of them saw selling pressure today. Supreme Industries, yesterday the management cut the volume guidance on our channel, and today a whole host of EPS cuts across consensus estimates was something that was witnessed. So Supreme Industries saw quite a bit of selling pressure today. Hindustan Oil Exploration in the broad end of the markets, a dispute with HPCL regarding quality issues. That stock ended low by over 5%. And Bata, very weak Q2. That stock too saw significant selling pressure, almost 7% lower for Bata by the end of the session.
Losing some grip there is Bata, 7% lower. Vivek, thank you for that update. Let's now go across to our guests, Jay Bala, the CMT at cashthechaos.com, and Mayuresh Joshi of William O'Neill. Gentlemen, thank you for sparing time and joining in. Jay, a word on the index first from you. The very sharp recovery seen in the last hour of trade, does the index have that room to go past that 26,000 mark? It's turned out to be a bit of a barrier in the last few days.
Yeah, hi. I believe that's just a breather for the market. I'm anticipating the Nifty to put pressure on the all-time high at 26,277. It could probably, 1 to 4 day time frame, pull back one more time, slightly below 25,700. I need to happen, but 25,700 is an important support, and I don't think the market is going to print 25,330 before it puts pressure on the all-time high of last year at 26,277. So the trend is still up, and as I've been reiterating since April, the market is heading for 29,000 into 2026.
All right, so those are some technical levels to watch out for. But let's talk about an important stock and the big story of the day. Trading at MCX resumed after halting for more than 4 hours amid a technical glitch. This was the second halt in trading in the commodity exchange this year. Let's get in Manisha Gupta, who's here with all the details and what transpired with the exchange this time. Manisha.
Oh, well, absolutely. The normal trading on MCX commenced only at 1:25. This was a delay of 4 hours and 25 minutes from a normal timing of 9 a.m. Remember, the commodity derivative markets trade from 9 a.m. to 11:30 p.m. and today was quite a delayed segment there. So the participants did get 4 minutes from 1:20 to 1:25 to cancel any pending orders that they had, and the normal trading then began from 1:25 p.m. itself. Well, the MCX in its release has said that all systems are functioning normally after 1:25, that is, and that a probe now has been initiated on priority, and MCX is working to identify the cause, and everything will be ensured that this does not go on going forward therein. MCX, remember, will also have to write to the SEBI, the regulator, pretty soon on what went wrong, the cause of it, and of course what measures are being taken. SEBI, remember, has a guideline for technical glitches like this. They have measures in place as well. So there is going to be some back and forth as we anticipate onto this one. But also the other thing is that this is not the first time that this is happening. Brokerages for some time now have been complaining that there are delays with settlement fees, orders being confirmed as well. And the previous time that we saw MCX go through a technical glitch was all the way back in July 2025, which is just 3.5 months ago. At that time, the delay was 1 hour and 10 minutes. And before that as well, there has been a glitch in 2024 and then 2018 and 2017. But 4 hours and 25 minutes perhaps has been the longest till time. Interestingly, it was only yesterday that we did see MCX launch options on bullion index, and we also saw lower circuits on silver. This is an important time for commodity traders because we're looking at huge volatile moves for precious metals, for base metals and energy as well. Remember, 98% of all commodity derivative that is done, traded in India is a market share that MCX has. So at a day like that, when you had huge volatility and a gap down opening, as we saw by the time at 1:25 that the exchange is open, so a lot clearly had been lost. There's a lot of complaints still coming in from brokerages, members, etc. We still are waiting for MCX to answer all of that. But at this point in time, what we understand is that trading is back to normal.
Trading is back to normal. Manisha, thank you for that update. Mayuresh, a word on MCX. Maybe fundamentals remain intact, but incidents like these always end up putting a dampener over sentiments in general. If you have a word on MCX.
No, you're absolutely right. I think it does shake the confidence in terms of sentiments, at least, if such instances are bound to happen. And therefore, I think the moves as an exchange that they take in ensuring that the platform runs seamlessly is going to be very, very encouraging. However, I think I don't believe personally, I was speaking to a lot of broker friends, that this will happen again. And as Manisha was pointing out, I think the other pertinent issues that are probably coming through, they're able to probably just smoothen that out as well. I think the processes should normalize as we go ahead. So I think a sentimental reaction, but nothing beyond.
Okay, just a sentimental reaction on MCX. It did see that small spike towards the end of this trading session. That's about MCX. Let's talk about the oil space, oil and gas space. Now, do remember, we've been talking about those sanctions that came by from the US and 2 Russian oil and gas companies. All these stocks were on our radar. The new update is that sources have told CNBC-TV18 that November 21 is a hard deadline, and any supply from sanctioned entities will be turned away by Indian refiners post the deadline. Now, IOC also reported numbers yesterday. Post that, they did indicate that they will comply with US sanctions on Russian oil imports. And right now, in Q2, Russian crude imports fell to 19%, which compares to 24% on a sequential basis. We did have IOC also saying that they remain flexible to source it from US or other crude offering best returns and best margins as well going forward. Reliance Industries also indicated that yes, they will fully comply with any guidance from the government with respect to any commentary coming in with respect to Russian oil imports. So that is something that they mentioned. Chennai Petroleum told us yesterday that Russian oil imports have come down to 20% versus 40% earlier. They've started importing from the US markets as well, and they are expanding their crude basket, whichever is most efficient for their margins going forward. Now, do remember discounts on Russian oil, that was around $15 to $16 per barrel when India started purchase of Russian oil. Now it has come down to $2 to $3 per barrel. So that advantage that refiners were seeing does not exist anymore. Some of the analysts did indicate at best there will be an impact of 2 to 3% if Russian crude imports are halted. Jefferies put out a note today. They did say that outlook now is little weaker because of these sanctions that have come by, because there will be lower availability of discounted crude. But again, remember, the discount has narrowed quite a bit, so it will not be that big an impact that we are seeing across the companies this time.
Interesting with that. A lot of companies coming out with updates on the Russian crude sourcing. Quick word on crude itself. Jay, where do you see prices headed? You've seen a slight rebound back towards 66 for Brent. Where do you see prices? And within the oil basket in India itself, what looks interesting on the charts? The ONGCs and the likes, or the oil marketing companies?
Hi, I've been projecting 55 level for the WTI crude, and it reached 55.96 or something just a few sessions ago, and then it rose 6%. And crude still continues to be on a downward trajectory, and I don't think WTI is going to rise past 66. And anticipating a final low to come through below the April low of $55, somewhere about 52 to 50. Within the oil and marketing space in the Indian market, I like all three. In fact, I have a call today on HPCL, but it's a short-term call. And I like Kirloskar oil within the related space. And more than upstream oil and gas, ONGs, like the ONGCs, I like the OMCs. And even Reliance in particular is looking quite bullish, but it's got nothing to do with whatever is happening in the crude space. Possibly it's related, but I've been bullish on Reliance. I'm anticipating Reliance to go to somewhere about 1,600 to 1,700 in the medium term.
Okay, all right. So you're bullish on Reliance Industries. That's the pick from the oil and gas space. Let's talk about some more stocks now. Shares of TTK Prestige and Car Trade Tech surge in trade after they reported a robust set of Q2 numbers. Upasana Bhatt is joining us now with more details on these. Upasana, over to you.
First up, let me start with TTK Prestige. It was a good set of numbers. Company reported a double-digit revenue growth of 11% after several quarters of tepid growth. Now, revenue growth is aided by company's cookware segment and even its increasing focus on the premiumization. Now, if we look at the H1 FY26 revenue growth, it stands at 8% versus the full-year guidance of high single-digit growth given by the company earlier. So, it is well in that range. Now, looking at the consolidated numbers, revenue saw an uptick of 11% on a YoY basis. Gross margin saw an uptick of 120 basis points. EBITDA saw an uptick of 33%, and margins also saw a sharp up move of 190 basis points. PAT also saw an uptick of 21%. Now, coming to car trade, it has reported a strong Q2 earnings. The overall outlook given by the company also remains healthy, with a margin target of 55 to 60% given by them. Now, profit stood at 60 crores versus 28 crores. Revenue saw an uptick of 25%. EBITDA saw an uptick of 95%, and margins stood at 33% versus 21%. Now, company says that Q3 and Q4 tends to be stronger than Q1 and Q2. Hence, it expects better growth in the second half as well.
Indeed, and what a turnaround it has been for Car Trade Technologies. Upasana, thank you for that. And Mayuresh, a quick word on both of them. Car Trade, of course, you witnessed the turnaround from almost 350 levels to now almost 3,000 plus. Your word on Car Trade and TTK Prestige, the numbers may have been good, but the commentary is not very impressive. They've spoken about tariff uncertainties, the MFI stress, and a lot more.
Absolutely. I think for car trade, I think the numbers have been exceptionally good this time around. And therefore, I think if these numbers keep on continuing, our own expectations are that it will reflect very, very positively in terms of not just very, very stable margins that they're posting at this juncture, but also expectations and stronger cash flows that will probably come through. Obviously, valuations are now a concern, almost as you rightly pointed out. And therefore, I think fresh investments at this level probably seems to be a little bit circumspect. But yes, anybody holding can continue holding. For TTK, again, I think numbers were good. And the expectation largely is that these tariff worries, if they ease out by any means or any measure of standard in the next few months, I think that is definitely going to be a respite in terms of the company financials going forward as well. In terms of new product launches, I think that is what the street is probably keenly awaiting. And if that probably happens, I think that can give an impetus in terms of the growth prospects, both in terms of new value-added products into their kitty, as well as added margins that can probably come through. So I think it seems to be observed on these dynamics, how TTK will probably perform until.
All right, take that point. Thank you so much, Mayuresh and Jay, for joining us with your insights fundamentally and technically on markets and specific stocks. With that, it's time for a short break now. We'll get to the top corporate voices along with the key market events to watch out for on the other side.
Welcome back. Now, the government has approved the first batch of 7 projects with an investment worth over 5,500 crore rupees under the electronics component manufacturing scheme. Now, this involves key component segments like manufacturing of copper-clad laminates, multi-layer printed circuit boards and camera modules. Now, the plan envisages production of components worth 36,500 crore rupees and creation of more than 5,100 direct jobs. Now, the approval follows a very strong response as the scheme had attracted 249 applications from both global and domestic companies, amounting to over 1.15 lakh crore rupees in proposed investments. Meanwhile, Union Minister Ashwini Vaishnav has said that these approvals, India will save 20,000 crore rupees on its import bill. Now, shares of these EMS companies, including Kaynes Tech and Syrma, all jumped after the announcements. As per Elara Capital, this is set to benefit Kaynes Tech and Syrma SGS. And that's not all. It expects approvals for players like Dixon Tech, PG Electroplast, other EMS players to be announced in subsequent batches as well. Listen into what some of these EMS players had to say after the approval.
Manufacturing is concerned, our land we have acquired, our building has come up already. We are almost in the completion stage. Whereas machinery we have ordered, it is in the pipeline. So considering all these things to meet the timeline what ministry is expecting, we will be there well within the timeline.
The first application is for multi-layer PCBs. This would be a plant with a capacity of 2.5 million multi-layer PCBs at full capacity with a targeted investment of about 765 crores. It is coming up in Andhra Pradesh. We expect to start the construction somewhere next month. I think in coming years, India will become a hub of component manufacturing. I think this is a very, very commendable step.
Okay, all right, let's go across to key corporate voices. First up is Bata. Around 80% of Bata's portfolio will see a price reduction following the proposed GST changes. The management says while Q2 was impacted by the GST transition, the company expects GST reforms and new categories to drive future growth. It saw an uptick in performance post-September 22. Further, the management expects margins to bounce back.
Next up is JK Tyre. The management says that the margins have expanded thanks to favorable raw material cost trends, and it's not just that. It expects the demand to remain steady because of the recent GST cuts. The tyre maker's domestic business has seen double-digit growth, with the management saying that the GST cut has given a boost to all the segments of the auto sector, and the impact will play out in the coming quarters. It also says that the underlying demand in auto is healthy and rural demand remains on firm ground.
And before we wrap, we bring you some key market events to watch out for. Upasna is back with us, standing by with the key events to focus for tomorrow. Upasna.
First up, let us look at the important results that we'll be closely tracking for tomorrow. Companies like HPCL, BHEL, L&T, Brigade Enterprises, CG Power, Coal India, Mahanagar Gas, NMDC, NTPC Green, United Breweries, PB Fintech, all these counters will be closely watching as they'll be reporting their Q2 FY26 numbers tomorrow. Also, on the global economic front, US will be reporting its crude oil inventories, and the most important, that is FOMC interest rate decision, will be out tomorrow night, followed by Fed Chair Jerome Powell's press conference at 12 a.m. in the midnight. And lastly, coming on the IPO front, Orkla India, a 1,700 crore IPO opens for subscription tomorrow.
IPO rush is back. Upasna, thank you for that. And with that, we call time on this edition of Markets Forward. From Sonal and me, thank you for watching. More news and updates continue on the other side.